Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq Stock Exchange. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me, we have Ryan McCormack. He's a QQQ equity ETF strategist over at Invesco. And Ryan, while the Nasdaq-100 trades lower with the broader market, it's still outperforming on the year.
Hey, Jill. Great to be here again. And you're absolutely right. Today we're seeing widespread red across the board. I think there's a number of reasons, mainly centered around kind of a deepening coronavirus epidemic. But that being said, when you look at the year-to-date chart through yesterday, QQQ up about 4.7% relative to the S&P, which is down 10.53%. So that outperformance that we've been talking about has continued. I think when you're looking at the drivers of that outperformance, you and I have talked at length about how it's really QQQ's overweight sectors that are driving the bus. And when you look under the hood, you have information technology, consumer discretionary, and communication services. All three of those sectors are up on the year in QQQ. When you look at the S&P 500, out of all 11 sectors, only infotech is the one that's in positive territory. And I know we've talked about this before, but healthcare is the other sector that's kind of like a wild card. Up near over 9% on the year within QQQ, down a little over 1.5% within the S&P, and this is through yesterday. Again, I think with that, it's really the security selection, right? You're seeing positive contributions of these sectors in QQQ while they're negative in the S&P 500. And healthcare is the perfect example of that, with Q's exposure to innovative biotech companies and a very innovative medical device company, whereas you look at the sector within the S&P, more geared towards those large pharmaceuticals, some of the medical device companies, healthcare providers, which have lagged on the year. So Q's performance very strong throughout the year, outperformance relative to the S&P, and it's really being driven by those four sectors.
All right, Ryan, let's take a look at our next chart here, and this is probably my favorite one. It shows that Nasdaq-100 companies really put their money into R&D and CapEx spend, which is what lines company up for future growth. And that's exactly what we see with the modern day industrials that are the constituents of the Nasdaq-100.
Yep, absolutely. And I agree, Jill. I think this may be my favorite chart as well, because it really does drive that story of innovation. We talk at length about how Nasdaq-100 companies are committed and consistently reinvest in their business through R&D, and this chart just solidifies that point. 10.4% of all sales are reinvested into R&D from these Nasdaq 100 companies. So, pretty amazing to think that for every $10 of sales, you're taking, at least $1 and reinvesting it back into the company to develop, innovative new products and to get ahead of these trends. I think as we're looking at the companies, and we've been talking for the past several weeks about how, on earnings calls, just company commentary, in many cases, they're talking about how this transformation of the global economy, kind of moving towards a work from home type environment, in many cases, they're well positioned to benefit from that. Beyond the companies themselves, I think investors are realizing that these companies are well positioned going forward, as we hit a very significant milestone last week. QQQ closed above $100 billion in AUM for the first time in its history, which is a very significant milestone. It's the fifth largest U.S. listed ETF that's out there. And it's been a very solid combination of both market performance, which we discussed, and flows, right? We mentioned last week how March and April flows into QQQ were the best back-to-back months since November and December of 2000. So companies are taking that money, they are reinvesting it in their business, and I think investors are starting to realize what sort of value add that provides.
All right, Ryan, great to have you with me as always. Thanks so much for joining.
Thanks, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.